Hey everyone, and welcome back to the Deep Dive. You ready to make some serious money moves? Today we are talking gold, specifically why it just smashed through to a record high of $2,721 an ounce.
Yeah, it's a fascinating development. There's been a lot of action in the markets lately, and gold is definitely one to watch.
To break it all down, we have this article from FX Empire. Gold price forecast hits record high of $2,721, eyes on higher targets.
And it's by Bruce Powers. He's got like 20 years of experience in finance, so he's definitely seen a thing or two.
So let's jump right in. Bruce's article mentions this bull flag pattern leading up to gold's big surge. Can you break that down for us? What does that even mean?
So a bull flag, right? It's a classic technical indicator, and basically it's like imagine a flag on a pole waving in the wind. The pole is a period of strong upward movement in the price.
Okay, I get that.
Then the flag itself represents a consolidation period where the price moves sideways, maybe dips a bit, like the flag flapping around.
Gotcha. I'm picturing it like the market is taking a breather.
Yeah, exactly. And the bull part means it often signals that the upward trend is going to keep going, like the market is ready to charge ahead again, which is what we seem to be seeing with gold right now.
So this is not just some random jump. It could be a sign that gold is going to climb even higher. Why is this happening now? What's driving all this?
That's the million-dollar question. The article talks a lot about the technical analysis, but for the average person, it's more about the bigger picture.
Like what kinds of things?
Well, gold's always been seen as this safe haven asset. When the economy gets shaky or there's a lot of uncertainty, people flock to gold.
It's like that comfort food you crave when you aren't feeling great, but for your money.
Yeah. And let's face it, there's been a lot of uncertainty in the air recently. I mean, look at Bitcoin, it's been rallying like crazy. And then you've got US retail sales going through the roof. And crude oil inventories are down, which has got a lot of people worried.
Hold on. So are you saying that there's a connection between the price of gold, people buying more stuff, and how much oil we have stored away? It sounds kind of crazy when you put it like that.
Well, think about it this way. When Bitcoin goes up, it might mean that some investors are looking for something different than the usual stocks and bonds. They want something that will hold its value if things get unpredictable.
So they're looking for a financial safety net, something more stable.
Right. And gold often plays that role. Just like Bitcoin, it can be a way for investors to feel a bit more secure when other parts of the market seem risky.
Okay, that makes sense. But what about the retail sales thing? Is that a good thing or a bad thing? I'm trying to see how it all fits together.
It's honestly a bit of a mixed bag. On one hand, you see strong retail sales and you think, okay, the economy must be doing all right. But it could also mean that people are spending out of fear, like they're worried about inflation eating away at their savings.
So they're spending their money before it loses even more value. And of course, that brings us right back to gold.
Exactly, because gold has this long history of being a hedge against inflation.
It's like that financial security blanket people reach for when times get tough.
Exactly. It's like people are trying to get ahead of the curve, right? And then you've got the whole crude oil inventory situation.
Right, you mentioned that earlier. Less oil usually means.
Higher prices. And when oil prices go up, well, everything gets more expensive for everybody. Businesses, consumers, you name it.
More expensive means.
More inflation. It's a vicious cycle. And guess what people turn to when they're worried about inflation? You got it, gold. So it all ties together.
Wow, it's like all these different economic forces are playing tug of war and gold is caught in the middle. But let's bring it back to Bruce's article for a sec. He talks about these price targets for gold. $2,724, $2,754, even as high as $2,854. I mean, those numbers sound pretty impressive, but what would it actually mean for gold to hit, say, $2,800? Like, put that into perspective for us.
$2,800 gold. We're talking uncharted territory. That would completely blow past the previous record highs. Can you imagine the headlines? It would be huge. But, and this is important, every investment has risks.
Right, what goes up must come down. Bruce does mention a support level at $2,686. Now, for those of us who aren't exactly experts in, technical analysis, what does that even mean?
So a support level, it's like a safety net for the price. If gold dips below $2,686, it could be a sign that the upward momentum is slowing down.
Like it's running out of steam.
Yeah, exactly. And we might see the price pull back a bit. Then there's the 20-day moving average. I know it sounds complicated.
A little bit, yeah.
But it's actually pretty straightforward. Think of it like tracking the average speed of a car over 20 days.
Okay, I'm following.
That average speed gives you an idea of the car's overall momentum, right? The 20-day moving average for gold is similar. It helps us see the general direction the price is heading in.
So if gold stays above that average, it's a good sign. But if it drops below,
Could be a warning sign that the rally is losing steam.
exactly. Okay, so we've got these potential upsides, potential downsides, all these charts and graphs, global events. It's a lot to keep track of.
It definitely highlights how complex financial markets can be. And while Bruce's article is great for understanding the technical stuff, there are other things to consider too, things that aren't always as easy to quantify.
Like what? Give us an example.
Geopolitics, global uncertainty, political tensions, even the possibility of conflict. Those can all have a huge impact on investor sentiment, and that can move the price of gold.
Because when things get scary, people run to safety.
Exactly. Gold has always been seen as a safe haven asset, and for good reason. It tends to hold its value, even when other assets are tanking. Look back at any period of major geopolitical instability, and you'll see gold shining bright.
It's like that old saying, when the going gets tough, the tough buy gold.
Well, not exactly, but you get the idea.
Fair enough. But seriously, it's fascinating how these global events can ripple through the markets and affect something as tangible as the price of gold. And speaking of factors that influence gold, what about central banks? They must play a role too, right?
Absolutely. Central banks are huge players in the gold market. When they start buying or selling large amounts of gold, it can create waves, even shock waves, throughout the entire financial system.
So their decisions really matter.
Big time. And those decisions are often driven by their outlook on the global economy, inflation, currency valuations, you name it. So it's not just about technical analysis and charts. It's about understanding the bigger picture, the forces that shape the financial world we live in.
It's like trying to solve a giant, complicated puzzle, and gold is just one piece of it.
A very shiny, valuable piece.
That's for sure. So for our listeners who are now completely hooked on the world of gold, where can they learn more? What resources would you recommend? Where should they go next on their golden journey?
Well, Bruce's article on FX Empire is a fantastic starting point. He does a great job of breaking down the technical side of things.
It's definitely worth a read.
But remember, it's just one perspective. To really get a handle on this stuff, you've got to explore different viewpoints, read different analyses, maybe even talk to a financial advisor.
Don't put all your eggs in one basket, right?
Exactly. Do your research, ask questions, and make sure you're making informed decisions that align with your own personal financial goals and risk tolerance.
Because at the end of the day, it's your money, your future. You've got to be the one in control.
Okay, before we wrap things up, I have to ask, with gold hitting these record highs, are we all going to start stashing gold bars under our mattresses? Should we be preparing for, like, a gold rush 2.0?
Well, I wouldn't recommend converting your mattress into a vault just yet. It's really about finding that balance, right? Gold can be a part of a diversified portfolio, but it shouldn't be the whole picture.
Right, don't put all your eggs in one golden basket. Exactly. The key takeaway here is understanding. Even if you never actually buy gold, just knowing why it's important, how it reacts to global events, it makes you a more informed investor overall.
Love that. Knowledge is power, especially in the financial world. Well, folks, we've reached the end of our golden deep dive. Hopefully you've learned a thing or two.
It's been a pleasure.
Always a pleasure having you. And to our listeners, keep exploring, stay curious, and remember, the world of finance, it's a fascinating place. Until next time, happy investing.